Traders Corner, who also spoke in the event just over an hour ago. So let's go straight across. Jimmy's already checked in, which is fantastic. So if I can do the necessary clicking by the magic of GoToWebinar, he should be able to hear me now. And Jimmy, if you're there, you should be able to speak and you should be able to hear me.
Yeah, I can hear you loud and clear.
Oh, good morning to you, because I know it's still early where you are. Thank you for joining us. How are you?
Okay, it's not that early. I trade the European session, so it's actually my afternoon.
Oh, you're on a trader's time zone. So the eve of the inauguration of a new president in America, quite a historic moment. What's the atmosphere like there?
To tell you the truth, I don't get out much. I'm mostly in the house, and I don't really watch. I really don't know, to be honest. I don't watch much TV. I really don't know.
We probably
Sorry.
see as much as you do. It's occupying all the news channels over here. We're fascinated by all the ceremony that accompanies a new president coming into office. So it's going to be interesting to see it unfold. And of course, it's had impacts on the markets as well. I think really since November, since the president-elect was voted in. So we'll see how that goes. But you have been in forex trading for many years, working for a lot of the institutional bank at the bank level, and now mentoring people as well as you're obviously doing your own day trading every day. And I think you run a trading room. Is that right? You share your signals.
Well, I wouldn't call it sharing signals. I think it's more these days me taking the signals of the young guys, because I can show them what to do, but I don't have the energy they have to actually do it, to actually, on a 5-minute chart or 1-minute chart, find the signals and look at everything lining up. I mean, they're good at it. So I basically follow their signals, to be honest.
Well, that's a sort of a reverse mentoring benefit. That's good. Well, Jimmy, what we'll do, we'll get right into the presentation. So we'll pass over the presenter controls to you.
Okay.
So you'll have that little box turning up. You
Right.
just check that, and then we can share screens.
Should I hit the clean screen or the regular screen?
Clean screen is probably better because it just takes away all the little icons along the bottom.
Oh, I thought it was going to clean my screen for me. That would have been awesome.
We're old school. Oh, great. We can see it. So thank you, Simon, and RTC, it says. That's super. Well, we're privileged to have you joining us. You might want to maximize the screen if you can. We don't have the slideshow.
Well, let me see now. Are you seeing the slideshow, or are you seeing just...
We are seeing the slides, but they're quite small.
Okay, I think I got the wrong screen up. For some reason, it's showing.
This might be the
Let me
presenter's
put
view.
on. How about that? Does that change it to
Much
just...
better. Much better.
That should be a full screen.
Full screen there, which is fantastic. Okay.
And I noticed that the people who are in the room, if they want to, they can hit a little button and have their whole screen for the presentation, because some of the stuff I'm going to show may come off a little small. So if they have their screen open, that would be helpful.
You just need to maximize it in the usual way. Yeah, you'll see that button so that you can do that. Well, great. Well, if I can ask everybody just at home, just give us the housekeeping to know that you can hear Jimmy speaking and you can see his screen. That would be great before we get started. So if you can use that chat box just to give us a yes. Tina, thanks. Great. Carla, oh, great. Everybody's in. Everybody can hear. Loud and clear, says Stephen. So, Jimmy Young, I'll pass the reins over to you and say thank you.
Okay, thank you. So let's get started. I'm going to show you my routine, and then we can look at some live charts. And question and answer, I believe, comes at the end. If you have any questions along the way, you type them in, and Simon will have them ready to ask me at the end. I believe that's the way it's done. So in terms of my routine, what I'm thinking at any point is, what can I do right now? I'm not a big thinker about what may happen later on or tomorrow or the next day. I'm interested in right this minute, is there a trade that I can do? I am a day trader primarily. I just about never have an overnight position, so I'm just looking to put trades on, take them off in a matter of minutes to hours at the most. So if I can't do anything right this minute, I'm thinking in terms of what can I possibly do soon? Now I've been at this for approaching 40 years, so I do have a little more of a detailed approach than most people. However, I don't need to actually do much because it's all kind of in my memory already. So this may appear to you to be a lot of stuff, but it's not really. And I'm going to run through just 8 PowerPoint slides. Shouldn't take more than another 3 or 4 minutes. And then I'm going to show you the information behind it. And within 15 minutes in total, another 7 or 8 minutes, we should be ready to start looking at the live charts. So what I keep track of from a daily chart, just to have an idea of what the kind of the helicopter view of things is, the bigger picture view of things, is the dollar pairs, the yen pairs, stocks globally, interest rates globally, and then the main commodities. And I just want to have an idea over time. Don't need to be exact. I'm not looking to trade trend lines off of it or anything, but just to see in general what's going on in the world, so to speak. And then I keep track of the major news events, what I call tier one, just the ones that actually move the market in a very significant way from time to time, such as when the central banks say something, or an employment report. I guess you know non-farm payroll. Everybody kind of knows that in Forex. And then there's the inflation. There's the GDP. The whole economy is one number. When that comes out every 3 months in most countries, that'll cause a bit of a stir. And then retail sales are people buying stuff. It gives you an idea of how the economy is doing. And it also gives you an idea why we care about fundamentals at all is it all kind of comes back to interest rates. But rather than bore you with all that, we're going to move on. Now, I normally don't do a start of day trade. My start of day is 10 o'clock London time, 5 p.m. Eastern time. If you look at your trading platform, even if your spread betting platform, you'll see that they call one day ending at 5 p.m. and the next day starting at 5 p.m. or thereabouts. So we have to break the day down somewhere so I can make daily charts. So I use from 5 p.m. Eastern to 5 p.m. Eastern, which for you guys in the UK equates to 10 p.m. to 10 p.m. And if I see something very clear on the charts and I don't want to miss something, I may take a chance on a start of day trade. But the stop loss is 60 pips, and that's a lot for me. I'm more of a 25 pip max guy, and I like to get my stop to break even as soon as possible. I'm more of a 5-minute chart kind of a guy. But once in a while, I will take a chance on a start of day trade. And 60 pips just comes from looking at it. So if you went and looked at the pound dollar, the euro dollar, or the dollar yen pair, the daily charts open to high and open to low, you'll find that anytime you get a 100-point move, it's very, very unlikely you're going to get 60 pips in the other direction. So that may go right over your head, and a lot of what I say is likely to go over your head because remember, I've been doing this every day for almost 40 years. You may have been doing it for a matter of weeks, possibly months. So it's just a different level of understanding. What I also hope to get from looking at this information each evening at 5 p.m. Eastern to close up my books and get my books going for the next day is I want to see if I have any trade ideas, any trade views. Not that I want to act on them that moment, but just to have a feel for what I'm thinking at that point in time. The markets, as far as I'm concerned, are pretty much closed at 10 o'clock at night London time. I feel the market really opens at 7 o'clock in the morning London time. That's when I start live trading. My live trading room comes to life. And I'm strictly looking at 5-minute charts. That's it, just one chart. And for a news feed, I use TradeTheNews.com. I know there's Rand Squawk and Squawk Box and a few others out there. They're all good. but I don't want any surprises. If there's some kind of unexpected news out, I want to be aware of it so that I can, if I have a trade on, know what to do right away. And I find that important. I think the news is it's kind of a necessary evil to be aware of what's going on with the news. Another thing I look at is I look back at what happened since 10 p.m. the night before up to 7 in the morning. So that's about 9 hours. And I look at my two European pairs, the pound dollar, euro dollar. And if we get outside the range established during that 9-hour period from 5 p.m. Eastern till 2 o'clock in the morning for me, or from 10 o'clock at night to 7 in the morning for you in London, if it gets outside that range, I'm thinking it has potential to keep going. If it goes outside that range and come back in, I have a pretty good idea that maybe it wants to not go in the breakout direction, but go in the other direction. Hence, European break-in and breakout is something I look at starting right at 7 o'clock in the morning London time. What I'll also do is I'll update my trade view and my trade ideas. It's been a 9-hour window since I looked at the market last, so I want to make sure that I know what happened during those 9 hours. Do I have the same ideas? You know, what happened in terms of news and what happened, of course, in terms of the charts. You know, like when I'm looking at the charts and having ideas, well, I'm thinking certain things are going on. Well, if things have happened a lot differently in that interim period, well, then I need to update. I need to be flexible, see what's going on. For the next 10 hours, I'm looking at just my 5-minute charts, got my news feed up. My favorite trade is to see an oversized real body on a 5-minute candle. By oversized, I simply mean when you look at the candles prior to it, they're a lot smaller in terms of the real body. Now, all of a sudden, you see a big one. You know, that usually means something. Somebody did something. The market became unbalanced, even if it's only in a 5-minute time frame. So a lot of times that's the beginning of a move. And the highs and lows are really critical too. When you start seeing the lows getting higher for successive 5-minute candles, I think that's the kind of stuff that the algorithms can very easily trade. And also from my experience trading for the banks, I'm also aware of how the bigger orders go through the market. You know, you can't just go out and rip it because you run it against yourself. But that may be a story for another day because it's a little complicated. Clusters of hammers and dojis, you know, when it comes to a certain level and it just seems to keep trying to create real bodies, but it can't. It means that the other side of the market has come in. I find that to be a critical place for me. And again, we're looking at 5-minute charts, 5-minute candles. We're not looking for one 5-minute hammer or doji, but a series of them. I like breakouts. 95% of my trades are based upon breakouts, based upon it moving, whether it's breaking out of a new high or new low for the day, or it's breaking out of what looks like a congestion area intraday. I'm looking for a price to start moving. I want to buy at the worst price. I want to sell at the worst price, meaning I want to trade in the direction it's going right now, this minute. That's my own personal style, guys. I know everybody likes to wait for the pullbacks. News releases, I think you probably realized lately what happened with May on yesterday. You know, news releases is now, you see some huge moves after them. Whether they really make sense or not, that's not always the case, but the fact is you do get some really good price action, so it's a good time to pull out your technical tools. You know, just be aware that the news is out. And then support and resistance. I'm not really a big fan of trying to buy cheap, you know, when it goes down, or sell expensive when it's going up. I always kind of think if it's going up, it's going to keep going up. If it's going down, it's going to keep going down. That's me personally. But there are exceptions. And a lot of times you can see a support or resistance area, and then it starts to bounce off of it. In other words, it starts to go in the direction I'm intending it to go, and then I'm interested. But as far as trying to just arbitrarily expect it to turn around and go the other way all of a sudden, not a big fan of it. This is the last PowerPoint slide. I heard a couple of the presentations today talking about the money, talking about leverage, etc. For me, I use a daily stop loss limit. I'm a day trader, so I don't have any positions at night. And again, Nick, from time to time I do, but we're talking about 19 out of 20 days a month. I don't have any trades at night, so I can start in the morning with no trades, and for the day I give myself a certain amount of money, and that's it. If I lose that amount of money, I'm out. So I don't have, if I want to bet it all on one trade, fine. If I want to bet it on a few trades, fine. If I make some money and I want to risk that money, fine. But the only rule I give myself is X amount of dollars is my daily limit, and for no reason do I ever break that, no matter what. And what I like to do for myself is get my stops to break even as soon as possible. I'm a huge fan of that. I like to, if I get a stop, if I get a little profit in a trade, I like to move the stop to break even. A lot of times it'll come back and get me and take me out, and I don't make anything. But it makes me feel comfortable in my trading. Okay, as I said, that'd be short PowerPoint, so we're done with the PowerPoint. Escape
Jimmy,
it? Yeah.
just a quick first question from Steve. It says, regarding support and resistance, are you more in tune with support and resistance at the trend line level as opposed to the horizontal key level support and resistance?
Horizontal key level.
So you're more in tune with horizontal key levels?
Yeah, so if I'm looking at support and resistance, I'm looking at it straight across the chart.
Okay, fantastic. Thank you.
Okay. All right, so I'm going to put away this PowerPoint. That's one down. And I'm going to briefly show you my spreadsheet. I don't want to spend too much time because I want to look at the live charts. But based on what we just talked about, just a summary, guys. These are the major pairs, the last 7 trading days. The yen pairs down here. I guess you call these the dollar pairs, and these the yen pairs. The dollar's been doing its thing with Trump, so that's important. And anytime the stocks start taking a beating or people get worried, they buy the yen. They sell the dollar yen, and all the yen pairs tend to move together. So I keep an eye on them. The stock markets, I want to know in general, like what's going on with the stock markets. Like you can see the Japanese stock market's been going down and dollar yen's been going down. And that's something that, I keep an eye on because they do follow. Interest rates, I want to know in general whose interest rates are moving. Not that I can trade it every day, but just the big picture. Then with the main commodities. And again, you guys, keep in mind, I've been doing this for almost 40 years. So for me, I can look at all of that and see it all in 10 seconds. It doesn't take me long. For new people, I know it's way too much information. On my spreadsheet, I look at each day what happened. This is yesterday, so I can quickly see that the dollar was up against every single currency. I can see that the Japanese stock market had a huge day, supporting a big move up in dollar yen. I can see oil was down, so I would expect dollar Canada to be higher, the Canadian to be weaker. It was. I can see a lot by just looking at that quickly. And I can see that, okay, the dollar was very, very strong, but the yen pairs are all higher, which means that the yen was weaker than all the other currencies, so all the other currencies are up versus the yen. That's what I can see there. That's for just yesterday. For the week so far, you can see things flattened out. So we had one of those bad dollar, good dollar deals, and today we're in seeing what happens next mode. In terms of the news, I'm only interested in the main things, like I told you. The central banks, the retail sales, the employment, the key government officials speaking, the inflation numbers, the GDP numbers. That's it. So I kind of got my whole year mapped out. And for each one I have, See, these are tradable differences. So if the UK retail sales is different by 0.5, I expect the pound dollar to move 50 points in that direction. And I keep those numbers for all of them. How do I get those numbers? I keep track. So for each country, like this is the US, there's just a few each month. This is a whole month. I look at 6. That's December. I look at 6, just the main ones. And again, what we're talking about is the inflation numbers, the central bank numbers, the retail sales, and the employment. And I have that for every country. And so I have a pretty good idea when the news comes out what's supposed to happen. Not that it's a huge advantage, but where I find it's an advantage is if it doesn't happen the way it should, it tells me that perhaps there's a technical strength or weakness I can take advantage of in that particular pair. Detail-wise, again, for each currency pair, I keep my daily charts. These I keep back to the day Trump got he won the election. So starting November the 9th. This is what's happened since then in, say, pound dollar. This is the important news events to keep them down here. This is what's happened with our stocks. This is what happens with our interest rates. Down here, I keep track of how much up and down each day the pound dollar goes from the opening price to its extremes. So that tells me right away, looking at this, the pound really doesn't move more than 200 points, up or down. A lot of times 100 points is about all it can do. And every once in a while you get an outlier like this, but this is driven by news, and that's to be expected. Again, this is maybe way too much information for a lot of you. I apologize if it is. Probably dollar yen is kind of a cool one to look at because with Trump, you see, this is where Trump's election started. By the time he got elected, we had gone down because that was the way it was supposed to go, and all the way back up. It started the beginning of a huge up move. And this is where we are now. So I keep an eye on this stuff to give me an idea of what's going on. I'm a little anal. I even keep track of milk because this affects the New Zealand currency. But again, I use all of that. I'm going to X out of that, close that out. I keep that for background, guys, just to have a feel for what's going on. In the end, I put out an idea every week for my clients. I basically say, okay, this is what happened last week real briefly. These are the main news events, what I call tier 1. I think this is important right here. I can give you something. If you listen to one thing, if you get one thing out of this presentation, it's this, because you can use it over and over again. We're talking about May speaking. When she was speaking, that was yesterday, when we got that 300-point move up in the pound. You see, when she's speaking, when she initially starts speaking, it'll probably be soft Brexit, pound up, hard Brexit, pound down. Now here's the initial direction will likely be determined by May's words and tone, but after that, in other words, after she gets it out, anything goes in today's algo charge market. What I mean by that is if you look after the Trump election, the dollar was supposed to collapse, and because of Trump, the stock markets were supposed to collapse because of Trump, and everything went just the complete opposite. It went that way as he was winning the election. As soon as he won it, everything went completely the other way. And, all your major news services, all your experts all had it wrong. And the very next day, they all had it right because they explained why all of a sudden it's totally different. So, with the fundamentals these days, the idea to remember is just trade what happens with the price action. Don't worry about the actual news. It'll probably do what it's supposed to do for a certain amount. But when it stops doing what it's supposed to do, that's where your opportunities are. This is the rest of the news for this week. I give one trade each week. I give a little trade view and then just one trade. So I keep it real simple because that's what some people want. They're, Jimmy, I don't want all your details. Just tell me the trade for the week. So for this past week, we actually got lucky and we hit our profit on Tuesday. So 135 points. We were going to go above the high of those 2 days, or trying to make the same amount. So we hit our profit target, so our one trade for the week. And that's what I give to my clients. That's it. Good luck. Nice and short. And then every day I put out what I call my daily trade finder, where I, in 3 to 5 minutes, I say, this is what happened today. This is the key points of today. This is what I see for tomorrow. And that spreadsheet I show you, I kind of walk them through that, but real quickly, because Goldman Sachs once said, their clients don't want more than 3 minutes. If Goldman Sachs' clients don't want more than 3 minutes, who am I to give them longer than that? Okay, as I said, I only look at, oh, by the way, are we getting this? Anybody have any questions, Simon, at this point?
Yeah, well, one question just been sitting for a few minutes from Cole. Jimmy, he says, where is the chart that gave the overview information from, in brackets, oil up yesterday? I'm not exactly sure I follow that question, Cole. Where is the chart that gave?
Okay, so what I do each night is I type in the daily open, high, low, close for the oil into an Excel spreadsheet, and it automatically creates the chart. So you can program it and say, okay, whatever's on these spaces for the next 2 months, it's going to automatically put it on there. So as soon as I put the open, high, close in, it'll pop up the new price of oil. So
okay, so it's an Excel. You put the figures in yourself.
Yeah.
So how many pairs do you trade? Asks GC.
I traded the pound dollar for 10 hours a day for 20 years and as an institutional trader. So that's my baby. That's the one I trade. I also, from time to time, will mess around with the euro dollar or the dollar yen. And that's it. I keep track of the Aussie, New Zealand, and Canada. I give opinions of them for my clients, etc. But when it comes to putting the hard money on them, I very, very seldom do. I go on record as saying I hate dollar Canada. I hate it. I always get it wrong. Every time I do dollar Canada, all of a sudden it doesn't pay attention to oil. So I stay away from it. So yeah, to answer the question, really, essentially what I do is I try to get in at 2 in the morning my time, which is 7 o'clock in the morning London time, and I try to hang around till London goes home if I can. Sometimes I need to take a break in between, but I love the European morning and the European currencies. I used to trade for manufacturers Hanover. I lived in London, traded for them out of London, and I love the morning in Europe because I like the way the market moves, because all the corporations, all the hedge funds, they come in the European morning and they get their stuff done. They do the big stuff. So I like to see price action based on what I believe is good amounts of trading.
Fantastic. Steve says, just the run through on the spreadsheet helps give a real feel for what information a trader needs to have at hand and to blend into trade ideas. Excellent, says Steve. Okay, so he's just appreciating the run through of all these key information points that you have on the spreadsheet.
Yeah, it's a hard thing for to kind of. I guess I update and send it to my clients every day. So, and I need it for myself. So I don't mind doing it. Believe it or not, that entire spreadsheet to update it takes me about 20 minutes. So it's not too bad, and I like the feel of actually, putting in the open, high, low, close. Then the chart pops up. I can't help but look at every chart. Sometimes when you just look at charts, after a while, they all kind of look the same.
Agree with Jimmy, says Richard. Short-term technical with news on the dollar CAD often goes the opposite way and is diabolical. GC again coming back saying, what is the best trade for today for the pairs that you trade? Okay, looking at today's pairs that you normally trade, which one catches your attention?
Well, I can show you a trade we did today, a trade we actually did today in our live trading room, and then we'll take a look at the charts and see what we can come up with live, yeah? But this is a trade, I think it's important to get a little bit of a feel, a little bit of an education here. So let me go back and see if yeah, here, look, this is a perfect trade right here. Now, here's your scenario, right? So, all right, so, okay, so this guy Cam, he's one of my guys. He says, you know, we basically we greet each other in the morning. You know, this is where our day's starting. You know, this is in Eastern time, so it's 7:27 London time. Good morning, good morning. Now, I got in at 5 minutes to 3 o'clock in the morning, so 5 minutes to 8. As I'm just getting in, he says I'm long. He bought pound dollar pair, so I try to do whatever he does because I know he's good. So, and then you know we got in someone else. Now he tells me, okay, 4 minutes later he's already moving it to break even because it moved. And then another trader comes in and says, okay, we got Prime Minister Theresa May speaking in a few minutes, you know, an hour really. But, you know, keep that in mind, right? So this is how we work together. You know, this is what, you know, I try to make a trading room that's very similar to what the banks do. Now he's getting out, he made 30 points, but you can see that's 331. So he had to trade on for about 45 minutes. So what I do is I try to show everybody, okay, let's look at this trade. You know, now what he found was a couple of things we mentioned. We were talking about how when you see the wicks cluster, so you can see that the price came down strongly. Right at, this is 2 o'clock in the morning, so this is my time. This is not London time. So that's 7 o'clock in the morning. I told you that's the start when things start happening, and the pound gets sold off. But you see, it stops there for a long time, like 20 minutes. And then as it starts to go up, then he lets it clear this, and then this looks like where it broke down from, you know, this cluster here. When it's clearly a full candle above that, he's buying it right there. And he's looking at the pattern. You see the pattern of the lows getting higher every time? As soon as that pattern breaks, he's out. He made 30 points. Now you also have from the beginning of the day, if you look, this is actually the lowest it went on that move down. It actually turned out to be what I call the beginning of the day, which is 5 p.m. Eastern, 10 p.m. London time, exactly a 78.6 retracement right over there. I happen to like the 78.6 retracement because I know I'm wrong if it goes another 20%, which means if it goes through that low. So I don't have to risk too much to know I'm wrong. So that's what I call a perfect trade. For me, you know, that's a perfect trade. So, you know, I said to him, is there anything else, Cam? Because I said to him, I don't know how you picked it, but I see all this after the fact, you know, a couple of minutes later. He says it was also crossing the 1 hour FC. So this is my own personal little thing. I created this with a guy from Texas 12 years ago. We put this up on the internet. It's been up there forever for free. Someone's going to ask, so we'll tell them. forexclimate.com. There's actually a little bit of instruction on how to use it there. We do some other stuff with it these days. But the fact that these two crossed each other, we're looking, you know, this is for another day, really. This is the dollar against 6 other currencies. That's the pound against 6 others. And the pound is starting to get a little stronger than the dollar. And he saw that as well. So putting it all together, he came up with that trade. So good trade, okay, you know, and I'm telling him, okay, I'm taking your trade, so I want to be. Oh, that's what I call a perfect trade. Now I'm going to close that up and look at these live charts. So give me just 1 second. I'll be right back, and we'll take a look at these live charts together.
Just while we're waiting for Jimmy to come back, next up in about 25 minutes, we'll be hearing from Peter Reid at Pelican Exchange, one of the sponsors for today's event. So if you can download, first of all, the app, pelicanexchange.com, that would be terrific. And we'd like to just to explore a little bit like Jimmy is using the software for talking to the traders. Pelican Exchange is going to be.
Okay, sorry about that. Okay, so this is, I said I only look at one chart. I only look at the 5-minute charts because I think it's just too complicated to look at a bunch. Now, this happens to be Natdania software, free software on the internet. It lets me look at 1,000 periods. So look at the euro. That's Mario Draghi speaking. Wow. Let's take a look at that one. That looks cool. Now notice the euro goes and the pound also will go somewhat. You know, that's just a normal relationship between the two. Now looking at that, you know, you got good support right there. So if I want to take a chance, I'm going to be looking to buy it in this area here. So I'm going to use the same tool, a 78 retracement, and I'm wrong if it goes below the low there. That would be the trade. So that trade would already be no good. That would be a loser. So if you were thinking you want to try to buy that, you would have put the stop. So I'll show you what I mean. So you go lines, high, low. So if you wanted to buy this, I don't know what I almost said Trichette, what Draghi's saying. Of course, I want to consider that, but I would be thinking right over there. You see where it kind of stopped and made a little bit of a pullback? Well, that'd potentially be a place to buy it. See, that's one of the things I can tell you right away about the way we trade. If we would wait, wouldn't just buy it as it's dropping down, okay? But if it holds and starts to go up, try to buy it. And if it goes up a little further, we'll right away be thinking, you know what? I'm thinking if it starts to go lower, I'll get out, rather than wait and even risk that much. That's the way, that's the way I trade, you know, because that's what I learned from the banks. Not to try to eliminate risk whenever possible. So we have to see what he was saying there. I'm not sure exactly what that's about. But that's how I always look at where's the 78.6. I like that because lines right here. Horizontal high low. So now let's see. In general, if I'm looking at these charts to see what we're looking at here again, I only look at what's here. So looking at this, you can see that a 78.6 here would have been great, right? And it would have been great here, well, pretty good here, but it would have lost there. You know what I'm talking about, I think. So let's open one up. Lines. Oh, that's not going to work. There we go. There's your high, and that's your low. So if I'm thinking I'm bearish on this pair for today, then this becomes my sell area, and this becomes the point I'm wrong right here. Now, if I'm so if I'm a buyer, this is where I would be wrong. And if I'm a buyer, I'm thinking, okay, this is the lowest. I just do it the other way around. That's the lowest. That's been the highest so far. So when we were over here, when we had that first move, then you can see that the 78 is going to come in. I have it preset. That's the only one I look at. So it would have picked the bottom perfectly, but now it changes. So that would apply to this one. That would have been good, but now it would change. Let me just get rid of edit, delete all objects. Yeah. So, and that's the nature of the beast. It keeps changing, but I'd be looking at this and saying, okay, if it comes down here, maybe I want to buy in this area, and if I want to, I can come up with a whole area by just choosing a second one and saying, okay, they both look pretty good. So in this general area here, this could be a buy area, potentially. Let's see. Let's check that euro dollar out again. So I can see from my live trading room, If anyone wants the link, here it is. So somebody gave the link. I think you guys know where to get that link. Okay, that sounds dovish so far. Not sure. So he's gone dovish. You know, he was expected to be more or less neutral. He's going dovish. Now, what I'd be looking for is there's two things you can do with that, in my opinion. One of them would be I go to a 1-minute chart and I go studies and I go down to the 60 period simple moving average. Stick that on there. When this line is intersected by that price, I would consider buying. Let's zoom in a little bit. When this line here, when that price goes through that line, it's probably not going to happen for a while now, but as long as that line is pretty close to whatever the low is so far, because you put the stop below the low, that's one of the little tricks that we do. You know, we call that the 1-minute 60 period simple moving average, kind of simple concept. But it can work okay, but the idea is this line needs to be pretty close to the low so you don't have to risk too much. Sometimes what happens is after a move like this, it'll go steady. Now look at this, guys. Can you see how the high is getting lower? So you got starting right away, right? Ever since right there, right? So that's lower than the prior one. That's lower. That's lower. That's lower. That's lower. That's lower. That one's higher. That one's lower. 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 So far, this one is lower. Now, another thing you could do is if you get above this high, buy it, and then put the stop below it. So you wouldn't be risking much. Let's see how much that is. Let me zoom in some more. I wouldn't see a sell down here. It's already moved too much for me to want to sell it, but I could see potentially buying it. So I'd put a line here. And I put a line there. Whoops, I didn't want to put that one in there. That one snuck in there. Okay, so if this one goes above that high, you see the pattern gets broken. If it goes above that high, I could buy it and put a stop there. So what am I going to risk? Looks like it happened. Okay, so I'd be in. My stop loss would be, I can see where my stop is. It's going to be, the low was 03, so we say 3 points below it. That should be good. So 106 is my stop. And to get in, you go, the line was at 06. The line was at 10.6. So the line was at 11. 1 point above it is 12. And 2 for spread is 14. So the trade would be buy at 14, stop loss at even. Edit. I put my stop at 99, make it 15 points even. So I'm going to buy that when it trades at 11, so I'm going to have to pay at 12. I'm going to have to wait to 14. My spread is going to be 14. All right, so buy euro dollar 1.0614. And again, this is not investment advice. This is teaching. Edit. Add arrow, I'll go to an even 15 points. I'll put my stop at 99. All right, there. Win or lose, I'm okay with that. Because it's 15 points. 1.0599. Now, how much do you bet? I mean, I can probably help you out with that. It's 15 points, period. 15 points, period. If you bet a pound a point, you're risking 15 pounds. You bet 10 pounds a point, you're risking 150 pounds. If you bet 100 pounds a point, you're risking 1,500 pounds. I have no idea what your risk parameters are. All right, now as this starts to go, if this gets up to 24, okay, so now I move my stop to break even. So now my stop's at 14. If it goes back down and takes me out, so be it. But how much can I lose on this trade? Nothing. What you learn when you're a banker is protect your capital. That's the most important thing. You know, if it wants to go back up, it'll go back up. You know, if it comes back down and takes me out, well, it ain't behaving that well. The pattern, you see the pattern now went from lows to the other way around, you see? Edit, add arrow. Your pattern now is this is higher, this one's higher, that one's higher. So far, so good with the pattern, you see. Now, if it gets up here somewhere, you can start thinking about moving your stop to the low of the prior candle and lock in some profit. But that's got to happen, right? That hasn't happened yet. We're not out of the woods by a long shot here. It'd be nice if he said something good and it spiked up, because if that happened, I would just jump out. You know. Now, where do I think in terms of getting out? If I risk 15, if that gets to 29, I made 100% on my money. So for me, I'm out. I'm out right now. And you may say to myself, well, it could go a lot higher. Yeah, but I made 100% on my money. And I made 100% on my money in 10 minutes. So that's good enough for me personally. Actually, I'm exaggerating. Yeah, 10, maybe 15 minutes. I made 100% of my money. Now, you may say, well, that's not good enough. I want to make 2-to-1 risk reward, 3-to-1 risk reward. Yeah, but what happens if it goes down now? You went from up 100% to losing 100%. The way I explain it is this. If you bought a property in London and paid £500,000 for it, and it was worth £1 million a year later, are you telling me you would let that go back to break even, or would you make sure you walked away with some profit? See, I think about trading the same way I think about everything else in life. All right, I don't want to belabor this. I think you see that's an okay example. We got lucky. We happened to hit the high, but I didn't know that. Actually, a little higher than the high. We only needed 29. It looks like it went to 30, so it went a little bit higher. But I didn't know that this same candle could have gone up here somewhere, and then I would look like an idiot. But anytime you make 100% profit on a trade, guys, you're not an idiot. So now, what I see is what I look at is this pattern. Now, what I see is the pattern starting to break. So I'm not liking this trade as much as I did before. You see, but you see, the idea is I can't wait until I have no money and then figure out that it's no good anymore. I need to be proactive and take the money while it's there. That's the trick. You got to take the money while it's there. So now what I'm saying is I look at the pattern of the higher highs. Now you can see that this one looks like, I'm going to just get the information box. The high there, the low there was 22, and the low here was 21.9. The low here, I'm looking at the low. The low there was 22.1. The low there was 20.3. So it went almost 2 points lower. Okay. Now, what I do in terms of, I'm okay with one candle. I'm not okay with two. And I'm totally out for three. So you can see here, every single time it was going down except for one candle. It's okay to get a one candle pullback like that. That's okay, you know, because people like myself who are impatient taking their money can cause that, you know what I mean? But in terms of if you wanted to stay with this longer, you know, we were looking at a 1-bar reversal here. If you wanted, you could do a 2-bar reversal, which would mean you would look for 2 bars. So if I'm in here, I would look, when this candle starts, I would look back to the low of 2 bars. So I'd put my stop down here. A 1 bar, you'd put it, when this candle starts, you'd put it right there. Now, if you were still in this trade at this point, you see, well, if I wouldn't be in this trade because I would see this spike and say, you know what, that's a really nice candle. Let me get my money. Let me take my money. At some point on this candle, I don't know if I catch the top of it, but if I see a big candle, I want to get my money out. because we don't know what's going to happen in the future. It's always easy with the benefit of hindsight, So what I'm saying is, it's always easy when it's up here to say, yeah, I bought it down here. I bought it over here and I want to stay with it. Yeah, when it's up here, it's easy to say that, But along the way, when you got 100% profit on your trade, when you're looking at your trading account, Now, one of the things I think where we get like a disconnect, guys, is some of you are betting very small. So even though you've made 100% on your bet, meaning the amount you risked in pips you actually made, even though you've made 100% on your bet, it ain't that much money. Well, that's a money problem. That's not a trading problem. I don't want to belabor that too much. I wanted to tell you a couple more things, and I see my time is just about running out. So let's look at some more charts here. Okay, and again, why 289 periods on the 5-minute chart? Because that's 24 hours. That's the last day. Now I mark over here, you can see I mark in where the new day started. So looking at dollar yen, there's just really not much going on. One thing I notice about dollar yen, a lot of times it doesn't work as well as a lot of pairs in terms of it'll break support or resistance by a few pips and then it'll go back into it. A lot of times it does that. Looking at this pretty much straight across, I know that some of the people in my trading room were long this pair this morning, and they put their, wait a minute, let's see. Yeah. They were long this pair, and they put their stop, and they got stopped out there. So they put it very close to that other low, and they just got nicked. So that was a tough one. Now, see, to me, looking at this is just bullish. I don't like to go far back because I trade very short term. Now, of course, everything is being influenced by euro dollar. So you see this big candle right here, that big up candle. I bet you that's, yeah, see, that's when the euro dollar dropped, because remember what happens. The euro dollar and the dollar yen is what euro yen is. So if you multiply the euro dollar pair times the dollar yen pair, that equals the euro yen price. Because in the real world, there's no banks or institutions feeding cross prices into the brokers and spread bettors. They are feeding in the dollar yen price, they are feeding in the euro dollar price, and artificially the cross charts are created. Don't take my word for it, do the calculation. If you multiply, anytime you multiply the current price in dollar yen times the current price in euro dollar, it'll always equal the current price in the euro yen, because it's just a computer-generated chart. That's true of all cross rates. The only prices that are real are the ones based on the major pairs. That's how the system works. So if you're ever trading a cross pair, like if you said to me, I'm long euro yen right now, I would say, okay, you're long euro dollar and you're long dollar yen. Take a look at each pair separately and see if you like it as much as you do as a pair euro yen, because if you want, you can get rid of one side of that trade and just keep what side is driving it. Probably a story for another day. Simon, I'm talking too much. You got any more questions for me?
Jimmy, we've got lots of questions coming in.
Well, we got 5 minutes. We better go to questions.
Well, on that, Jimmy, I was wondering, I don't know what your calendar's like, but do you have an extra 10 or 15 minutes? Because we could make some extra time here.
I'm sure. I got plenty of time. Yeah, no problem.
That's great, because I think with everybody else, I know that the next presenter, we're not going to fill the full hour, so I think everybody would probably be okay if just to give you some more time, because they're loving the live trades, and I think it would be I'd rather let you have more time. and how
Okay,
to
why
actually
don't we
make
do
that.
this? Why don't you give me the questions you got now? If we have more time, we'll look at some more charts.
Thank you very much indeed. That's great. Well, going back first of all to Mike, he says, can you go over again how you use the 60-minute simple moving average on a 1-minute chart?
Yeah, anytime you see a big spike on a 5-minute chart, I only look at 5-minute charts, right? So anytime I see a big spike on a 5-minute chart, if it gets up if I see a few candles add up to 50 points, then I'm thinking about putting that on. But you're always going to see it with you're always going to see that with the news, because that's when you see those kind of spikes. So let me do this: edit, delete everything, and we'll do that again. So the first thing we do, we put a 1-minute chart up. So you can go view, wait a minute, how do you do time scale 1 minute, and you got a 1-minute chart. What I normally do is go periods 999, and then we'll zoom into this area here. And then, okay, now see, once it goes 50 points, so I use 50, so it's trading at 68. Okay, so I can see proportionately it's not 50 yet, but that's a huge move for this chart proportionately. Yeah. So at that point, I go studies. I go down to moving average. I say add the moving average, and I have 60. When I had saved the general setting, so I only use 60. That's the only one I look at. Why is that? Because when I worked for Manufacturers Hanover, there was this one trader who was really great, and he was a proprietary trader. Nobody knew what he did. And I finally got him to tell me what he did. He says, I use a 60-period moving average. When it's above it, I'm bullish. When it's below it, I'm bearish. That's all I do. And this guy was making tons of money. So for the last 30 years, that's the only one I look at. Okay, so that's it. You just put it on there, and you know at some point it's going to intersect it. You don't know when. So you can see it start to creep. And again, what I look for is I want this to be way down here somewhere so that it's close to here. So if this price, optimally, if this price went back down, for example, and started to create a double bottom here, and then we got some wicks, and then this line's down here, and we actually got through that line, well, then we have a story, right? Because we got this 1-minute 60 SMA going. We've got what appears to be a double bottom going. We got some wicks down here, and maybe on my 5-minute chart, I got the wicks on the 5-minute chart, and perhaps I start seeing a pattern as it's coming up to that line. What I'm seeing is a pattern of the higher lows, so that I got all my little tools going at once. I think it's a tragedy that people try to, trade a strategy, to trade an exact thing. I think what you want to do is look at the whole thing going on right now and try to figure out like what's really happening here. I think every day there's one currency. By one currency, I mean one currency, not one pair, but one currency that's kind of moving a lot more than the others. And usually that's the one you want to zero in on. Now, if you were trying to sell this, if I was trying to sell this, to be the same thing, just like I showed you before, try not to use too much information. This was the highest. Fibonacci retracement. That's been the highest. That's been the lowest. Now, if you really think this is going down, you're probably not going to get 78.6. If this really wants to go down, well, classic is what percent? Who knows? Well, of all these choices here, which one would be classic for a retracement if it's probably going to go down again? What percent? Anybody want to guess? 50. So you can see actually it turned out, yeah. See the 50% retracement and then back down. That's where you put it. So you had this big move down from the high. It retraced 50. Now somebody may say, now Jim, what about from the news? Okay, we do it from the news. There's the news. There's the low. And again, we want 50. So where would 50 be? It would just mean you'd be, so see how we did this before. We said that's the extreme, that's another potential, so this is your sell area right in there. Now the way we like to trade is we like to let it do this first, and as it starts coming down, be looking to get in, as opposed to it's running straight up and try and, bet that it's going to turn around and go the other way. I'm not big on that. But once it starts turning around, maybe when I see the pattern, I start seeing this pattern of lower lows. Maybe I wouldn't want to get into this bad boy. Whoops, I didn't mean to do that one. That one got snuck in on me. Maybe I want to wait until it really looks like it wants to go down again, maybe over here, as it's really starting to go down. Let me show you what it looks like in real time, like that. Really looking like it wants to go lower again, And again, I do already have the advantage of that little piece, so it makes it look easier to see, but you can kind of see even here, if it starts getting below these low. In other words, I like to really see it going down, because remember, all I'm looking to do is to catch a little bit of a move down. Now looking at this one, I got to think that this is going to be tough down here. The reason it stopped here this time is probably there's somebody who wants to buy it. There could very well be a big buyer there. When I worked in the banks, a lot of times if this would turn out to be a huge buyer. And what will happen is for the rest of the day, as that buyer, whatever he decides to do, if he decides to stay there, that could turn out to be the low if he has a big enough order. If he decides to move his order up a little bit, then the next time it retraces, it will stop at his next level. Because I've done that as a pound dollar trader. I used to have the Kuwait Investment Authority for a client, and he would come in and do £1 billion. So I'd be, whatever he said went. He determined the market for hours. And, he would, every time, he'd want to buy him every time it would come down, and he would. By the end of the day, everybody would be drawing trend lines on their charts, and I'd say that was the Kuwait Investment Authority that created that trend line. Again, I'm getting crazy. Story for another day. What else you got, Simon? What else you got for questions?
Okay, we've got Maverick says, really enjoyed Jimmy's candle by candle analysis on the live chart. Excellent. Good webinar, Jimmy. Thanks. From Philip. Nick says, Jimmy, do you use NetDania as your main charting package?
Yeah, I use NetDania. Now, there's two NetDanias here. You see, if you go to Instruments, More Instruments, and you go down to FXCM, and I use these because these prices are really good. They're actually the right prices. If you just use these, they're wrong. They're way off. Like on a news event, they could be off by 30 points. I don't know why that's the case, but if you go to More Instruments and then you choose FXCM, FX, these are very good, But keep in mind, the only ones out of all of these that are real is the ones that say dollar. They're the only ones that are a real price feed. Nobody's supplying Aussie New Zealand prices to a broker. That's not happening. But they are supplying Aussie dollar and New Zealand dollar. And the broker the broker has a program that divides one by the other, and that creates the cross price. If we have nothing else to do, I'll show you that. But let's keep going. What else you got?
Okay. Peter asks, and this is a question that's come up a couple of times, is there a way of determining which currency to focus on?
Yeah, well, first of all, it's two things. It's the news. What news came out yesterday about that currency, or what news is coming out today about that currency. What I call tier one. Again, the main stuff is the central bank speaking, is the government speaking, employment reports, something that can get it rolling. And also by looking at the chart, do you see any big candles? Obviously, if we look today, well, not obviously, nothing's that obvious, but if we go here, let me just save changes. No. All right, so if we go here, that window, yeah. So you can see today it's been the euro, right? Let's wait a minute. Edit, delete all objects and studies. just clean up these charts so you can see it all as one picture. Delete all of these. Yeah. Okay. You can see that this is the one in play today. See, so in my trading room, this is the one people are going to be most focused on. You know. Now I got one guy. He's the designated pound dollar trader. That's that guy Cam. I got one guy who just does. He's the designated dollar yen guy. Everybody can trade it. Everybody can have a view. But, you know, these guys are good. So when they, you know, when they do something, I do it with them. Now you have to deal with their style, you know. Most of the people are very short term. You know, these guys will pop the trade in, and if it ain't going, they'll pop it right out. They're not afraid to just pay a spread, you know. So, and they trade very short term. So, you know, one good trick is to watch the dollar yen and to watch the Nikkei together, because they tend to move very similarly. So I mean that's something, you know, it's a strategy. It probably can, if you look at it, you see them together. So all right. So if we looked at a let's say a daily chart, that's the dollar yen for the last year, and we would do the same thing with the Nikkei. So instrument, more instrument. I also use, again, I use FXCM. I have no affiliation with FXCM. Other than I happen to use their charts through Nardania. It's just a coincidence. Close. And if I do daily there, so now you're looking at periods. You're looking at 289. It's a little more than one full year. So windows, how vertical. You can kind of see they do follow each other. This whole move up in stocks is this move up here. You know, it roughly follows each other. And what's more important is if you look at it more recently. So if we were to cut this chart in half to 145 days and cut that in half to the last 145 days. Now, why do I do that? Because what I'm interested in is I'm interested in what's going on now. I'm interested in what's going on today. You see, I don't really care if this relationship didn't work 8 years ago. You know, I don't believe in back testing. I don't believe in looking much beyond yesterday. I don't believe in predicting more than tomorrow. I mean, if I was going to predict based upon what everybody was saying, well, I would be short dollar yen at about 100, and it's like 114. Right? When Trump got elected, the dollar yen was supposed to collapse. The stocks were supposed to collapse. None of that happened. It went completely the other way. Okay, I don't want to talk about that. What else you got?
We have Jerry asking what broker you use, and do you recommend any? This is a
I don't
question.
recommend any brokers. I started off when I started back in 2004 as an independent trader, retail trader. I used FXCM, and then they threw me out. They said I was gaming the system and trying to put them out of business because of the way I traded the news. I kind of created the idea of news straddles when you could actually get guaranteed fills, but that's a story from the distant past. So they threw me out, and I went to GFT, and then GFT closed up their New York office, and they gave me to Forex.com. I've been with Forex.com ever since, and I'm perfectly happy with them. I think you can do better in terms of spreads out there, but I don't do a lot of trades. You know, I'm trying to cherry pick 1 or 2 trades a day. And so, you know, the spread, okay, it matters and all, but for 1 or 2 trades a day, I don't worry about it too much. But there are better brokers out there, especially if you trade crosses. That's another thing. I don't do any cross trades. I just do strictly pound dollar, euro dollar, dollar yen, and I really do 95% pound dollar. So, you know, that spread is pretty much the same wherever you go. What else you got?
Okay, James is asking, what's Jimmy's views regarding currency manipulation? Do banks take price in one way to lure traders in, only to take the market in the opposite direction? Does this kind of thing go on?
I'll tell you a real quick story about that.
Okay.
I was working as a pound dollar trader. I got an order that if the pound hit $2 to buy 1 billion pounds at the market, and the pound touched 200, I went out and bought 1 billion pounds. It went up to 200.07. It moved 7 pips, and it was $1.99 before you could blink. So if there's any way that anybody could actually manipulate the market, I really doubt it. I don't think you can, because you never know what's there. Now, what I think happens these days is because of leverage and because of the nature of the way it's changed. It used to be when somebody needed to buy pounds, they had to buy pounds. In the modern world, they can buy options for pounds, they can sell options for, they can do 100 other things except actually buy the pounds. The point being that, well, I'll give you an example. Remember when we had the flash crash and the pound went from $1.24 to $1.18 in like 1 minute at midnight about 4 weeks ago? Remember that?
That's right.
Yes?
Yes, we do. Yeah.
Yeah, about 4 weeks ago. And the Bank of England and the Bank for International Settlements, the BIS, they did a study to see what caused it. And they concluded 3 things. Number 1, it was midnight. Number 2, it had to do with derivatives, option traders hedging positions. And number 3, it had to do with algorithms that probably weren't being manned at that hour by the right people, so they kind of screwed them up. So it's very possible in this day and age that a lot of the price moves we see in the market for over a matter of minutes are being manipulated. I do think that happens all the time now, routinely, because they can. And it's because they're doing other things other than just buying and selling the spot market. They're buying what's called no-touch options and one-touch options and all of these other things that are based upon the price, but you don't necessarily have to actually do the physical trades. I see this, if you're looking at charts carefully, guys, you'll see that between 10 minutes to the hour and 10 minutes after the hour, and exactly on the hour, you usually always get like a 10 or a 15-point move in the pound dollar, euro dollar, dollar yen. You'll see it, especially in pound dollar. And I'm just going to take a look at today. I don't know for sure, but let's look at pound dollar. And let's look at the even hours. So let's zoom in. Now, we did have news today, but I just want to zoom in for and just take a look. Okay. So what I'm saying is if we start off, okay, here's 8 o'clock right on the button. And you can see 8 o'clock, 5 after, 10 after, good movement. And then it does not much. As you get close near the end of the hour, it should start to move again. Here, right at the beginning of the hour, you see the size of the candle? You'll see that that's very usual. See here, right before 11, you're going to get movement, and then in between, it doesn't move that much. So I believe that there's a lot of interest in on the hour, each hour, during the busy times, from 7 in the morning to 5 p.m. London time. There's a lot of interest in options, binary options of all different kinds. And so right at the beginning of the hour, right before it, right near the end of it, you get these moves of 10 or 15 points. That's one thing I can say where I'm clearly seeing manipulation. But the idea of, to answer the gentleman's question, the idea of trying to manipulate the market for a longer period of time, I don't think so. Not for a matter of hours. I don't think that's, that's really rough. But for a matter of minutes, I think it goes on all the time now. And I try to take advantage of it. I try to as best I can. But, I find that so far I've been trying for a whole year, and I'm probably best break even trying to take advantage of the before and after hour movements as a strategy. I'm still like trying to perfect that one, sharpening the knife.
Thanks, Jimmy. Thank you. Right, we'll just take 3 more questions if we can.
Sure.
Trevor says you use candlestick patterns for your trading. What are your thoughts on candlestick patterns? Is there any particular reason why you use candlesticks as opposed to any other?
Well, see, I like candlesticks because they're easy to see. Like you could clearly see that this here was, that's the pan. That was a big move. That was, that you can see it very clearly because of the colors, and you can see that the move was sustained by the fact that the real body, the fat part, is so big. What I'm mostly interested from candles is this stuff. It's this, it's the pullback. It's when it keeps rejecting like that from a short-term basis, like that could be cool. But that's what I'm mostly interested in is the shadows. And on a 5-minute chart, that's what I'm not looking at one. I'm looking for a series of them. You'll see it quite a bit, not all the time, but you can kind of see like, yeah, nice strong move, and it kind of just for a moment loses the mojo. Over here, over here you can see it. And it didn't. It actually kept going up. So it doesn't always come up, but it's a tool. It's just meant as a tool. I always like to ask the reason for it. I'll give you an example. If I saw, let me say, edit, add arrow. If I saw I don't want to be sloppy. I'll just tell you. You can visualize it. The point I'm trying to make is that a lot of times when you look at a particular candle shape, like a hammer, which means the price went all the way, the price started off, went all the way down, came all the way back up. A lot of times you want to think about, well, why did that happen? If it's related in some way to news, then you may say to yourself, well, it went down and that news was bad, so it should have stayed down. The fact that it went back up, you may want to think it through and say, well, maybe that hammer candle's telling me just the opposite of what it should be telling me. It may not mean what it means according to reading a book about candles. And again, what that comes down to is trying not to be so tell me exactly what to do about the trading. I think people try to trade like being an accountant or learning how to be a bus driver. If you learn the exact rules, everything will be fine. And I think that robs you of a lot of your ability to try to connect some dots and come up with a creative idea, and then find a location on the chart where you don't have to risk too much, and you think the trade has a good chance. To me, a lot of it is about location. Can I get away with a 10-point stop here? Can I get away with a 15-point stop? That's what I'm after, really. And as far as the profit goes, well, if it's going good and it's going through systematic, without any big, candles my favor, I can stay in, But if it gives me a lot of money all of a sudden, I'm not going to try and hold out for more, All right, what else you got?
We have got Sam asking, how is the relationship between the US dollar, Japanese yen, and the stock market trade? Okay, how is the relationship between the US dollar, Japanese yen, and the stock market traded?
Well, the idea is that they tend to correlate, which means they tend to move similarly. They tend to move in the same direction. The dollar-yen pair and the Nikkei tend to move in the same direction. So if they're not moving in the same direction, or one is and one isn't, it may not be as strong a signal to trade dollar-yen as when they're both moving more or less similarly. So if you have a support level in both, and they're both breaking it at around the same time, it could mean that both of them want to go lower. So if one starts to go lower, it actually could help the other go lower because of the trades that'll be put on in anticipation of it. So it can become self-fulfilling. But it's not meant to be a tit for tat, because one doesn't cause the other to move. They simply appear to have a pattern of moving similarly. And, it's very hot right now. It's working great now. It looks like it's been working great for a few months now. But at some point, it'll stop working for a while. And when it stops working, you stop using it. I know that sucks, but that's the way it is, you know.
Nick, Anto, and Sam are all asking roughly the same question. They're looking at the market manipulation again. Does it happen in London at the London 4 p.m. fix?
Oh yeah,
Why
definitely.
the big move in London? That sort of thing. Can you
Oh,
explain?
it did actually. Actually, the government clamped down on that when they nailed all those guys for fixing the LIBOR and everything else. They also nailed a bunch of them for fixing the fix. So what happens is, I remember this specifically. It's also 11 o'clock in the morning London time, and 4 o'clock in the afternoon. There's two different fixings, and what it is a lot of international bond issues, and consequently a lot of transactions period are based upon the price exactly at 4 p.m. London time. So if you can imagine, you're working for a major firm and you know you get a call from downstairs saying, look, just a heads up, in a half an hour I got to buy 500 million pounds from you at the price a half an hour from now. So can you see how it would make sense that you'd wait until a few minutes before 4 o'clock, and then you would buy all the pounds and more to drive the price higher because you're going to sell them at that inflated price exactly at 4 o'clock. Does that make sense, or am I not clear?
Yeah, I understand, Jimmy, how you're explaining it. Yeah. Well, I think we'll have to wrap it up there. And thank you for giving us an extra 20 minutes. I didn't know whether you were dashing out or not. And thank you to Peter Reid, who's waiting. I asked Peter if we could just postpone his start time to allow you to continue. And the feedback has been tremendous on the chat box. So I think everybody was in tune with that. One final question I didn't get onto. Someone was asking you referred to your chat room. What is the link to that? How do people find out about your trading chat room?
Yeah, I think the easiest way is to go to Jimmy Young Forex on Google, and you'll see my website there. You'll see everything anybody's written about me. I've been around forever, so to speak. I've been in the training end for more than 10 years, so it's good. You'll see everything there. You'll see whatever, you'll have those scam rooms, everybody. Anything you want to see about me will be there, but you'll see my website there. Now, as
Well,
far as if anybody buys anything in the month of January, I will split it with you, Simon, 50-50, and I will give them a 20% discount. No, because somebody got to support you to keep this thing going, right? I mean, that's how it works. So,
thank you very much.
well,
Thank you
in
very
the month
much.
of January, now, if they buy something after that or they continue with something, that's mine. But I'll give them a 20% discount, but they have to mention either Simon or RTC or something for me to know that, I come from there and I want my 20% discount. And, they should know that you're helping them, that they're helping you as well, because whatever I get, we'll split. Okay?
That's fantastic. Well, fantastic. Jimmy Young, thank you again so much for going on. And speaking of that, our next presenters will be of interest to you, Jimmy. They have launched a company called Pelican Exchange, which is an app which people can take around on their mobile phones, and they can create groups and chat, and mentors are making use of it more and more because they can. It's like having your group of followers in your pocket, and not only that, it is an FCA regulated entity, so you are allowed legally to provide signals, and it also has the facility to trade directly in and out of the app. So we're grateful for Pelican for being one of the sponsors of this event, and by way of that, they are partly financing it as well. So we're looking forward to that. So stay tuned if you can, Jimmy, and we'll tell you a bit more about Pelican.